a 6 gigawatt power load, and a potential $100 billion value. AMD has just teamed up with Meta to land what could be the most insane AI deal in history. But under the smoke of Cathy sell-off and the shadow of macro inflation, the market still hasn't realized that the 2nm MI450 is trying to overtake NVIDIA behind the low 0.79 PEG ratio, as this is 75% upside opportunity or a high volatility trap. What's up, guys? Welcome to Stock Market Breakdown. Recently, the narrative around AMD has been extremely split. On one side, it just secured a milestone, multi-billion-dollar partnership with Meta. On the other, you've got ARK Invest trimming positions and heavy macro volatility. A lot of people are asking me, can you still hold AMD right now? AMD has just reached a historic, long-term agreement with Meta Platforms. Meta plans to deploy up to 6 GW of AMD Instinct for its AI infrastructure. The potential value of this deal is estimated to reach $100 billion, with the initial phase centered around the customized MI450 GPU and EPYC processors, launching in the second half of 2026. This not only locks in revenue visibility for years to come, but also marks AMD officially carving out a meaningful gap in NVIDIA's dominance. This isn't just buying PUS anymore, this is buying an entire compute sea. The fact that Meta is willing to hand over a $100 billion appetite to AMD tells you the customization capability of MI450 has been validated by top-tier players. This kind of long-cycle deal gives AMD serious financial visibility. Is no longer a feast or famine. Supplier is becoming a true infrastructure partner in the AI era. Although ARK Invest recently sold around $7.08 million worth of AMD shares, triggering some investor panic, a deeper look shows this is noise, not a signal. In fact, Cathy would also reduce positions in Meta, NVIDIA, TSMC, and Broadcom at the same time. This looks more like a sector-wide portfolio rebalance rather than a company-specific bearish call on AMD's fundamentals, and shouldn't be overinterpreted as a slowdown in growth. If you only look at AMD being sold, you might think the fundamentals are breaking, but if you notice she is also selling NVIDIA and TSMC, then it's clearly just fund-level liquidity management. For retail investors, these kinds of forced rotations from big money often create rare buying opportunities. Don't get shaken up by short-term positioning. Focus on the orders, not someone else's trades. There's no denying that AMD stock volatility is heavily influenced by macro conditions. Geopolitical tensions have pushed up energy prices, reigniting inflation concerns and delaying rate cut expectations. This environment puts pressure on high-growth, high-multiple stocks like AMD, and is a key reason for the stock's choppiness at higher levels and a deterioration in its core business competitiveness. When inflation expectations rise, capital rotates out of high-beta stocks, but that doesn't stop Meta from placing orders with AMD. You have to separate market sentiment from business fundamentals. Macro volatility is uncontrollable, but AMD's position in the AI compute races as long as the AI infrastructure trend holds. Every macro-driven pullback is basically squeezing out excess valuation ahead of a potential 2026 earnings explosion. AMD demonstrated impressive cash-generating ability in 2025. Full-year revenue reached $34.06 billion, up 34% year-over-year, while net income surged 164% to over $4.03 billion. These numbers highlight AMD's scaling profitability, meaning as revenue grows, cost efficiency and operational leverage are improving significantly. This isn't just sales growth. It's a structural shift from high investment to high return. A 164% jump in net income tells you AMD's scale effect has kicked in. It used to compete on price with the margins. Now it's winning with high-margin products like MI300 and MI400. When profit growth outpaces revenue growth, that's when a company enters its cash extraction phase. That's exactly why we believe its valuation has room to be re-rated long-term. AMD's management guided Q1 2026 revenue to around $10 billion, significantly above the previous consensus of $9.04 billion. This strong start suggests the MI300 and the latest 400 series Plus are penetrating the data center market much faster than analysts expected. This kind of ahead-of-the-curve guidance greatly boosts confidence in potential year-over-year doubling. A $10 billion quarterly start is a serious signal. It means hyperscalers are adopting AMD at a nonlinear pace. This kind of guidance premium usually leads to multiple quarters of upward estimate revisions. AMD's strong start has essentially set the tone for a potential bull year. On the technology front, AMD plans to launch the Instinct MI450 GPU on TSMC's 2nm process if execution stays on track. This could allow AMD to reach the most advanced node ahead of NVIDIA. This timing advantage could significantly improve performance per watt for AI workloads, attracting top-tier customers like OpenAI, who are extremely sensitive to efficiency and power consumption. 2nm is the ultimate battleground. If AMD lands it before NVIDIA, the balance of power shifts. Remember, hyperscalers care most about performance per watt. AMD's bet here is asymmetric. That's why I see MI450 as one of the most important weapon-level products this year. From a valuation perspective, AMD is trading at around 37x forward divided by E, which carries a premium but isn't extreme within the AI sector. More importantly, its PEG ratio sits at just 0.79. Typically, a PEG below 1 indicates undervaluation, combined with a high beta of 1.96. This suggests that while volatility is high, the stock is actually undervalued relative to its expected earnings growth, offering an attractive risk-reward profile. A 37xP doesn't look cheap, but a 0.79 PEG tells you the growth is outpacing the price. That's the classic growth stock disguised as value. Of course, the 1.96 beta also reminds you this ride is going to be bumpy, not for the faint of heart. Across 45 analysts, AMD still holds a moderate buy rating, with an average score of 4.42. Institutions are projecting a 33% to 75% upside over the next year. Despite intensifying competition in AI, AMD's execution strength and deep partnerships like Meta provide a solid foundation for growth in a volatile market. Finding opportunity within the noise remains the most rational strategy. At the end of the day, AMD is a bet on execution. It has a 100BS order backing it, a 2nm positioning edge, and an attractive PEG ratio. So the real question isn't Meta's trillion-dollar infrastructure vision. Can AMD finally shake off its number to label in 2026? Drop your thoughts in the comments, like and subscribe to Stock Market Breakdown, and I'll see you in the next one.